the few notes that now follow current times, simply because it is a fact that one learns over the decades that I've spent watching the stock market that plus ça change, plus c'est la même chose. And yet, every year, there's some change which has come from nowhere. For instance, as we speak, the central event determining investor sentiment is the Ukraine war. And no one would reasonably have foreseen that 3 months ago, because it's based upon the urgings of a madman in Moscow, and one really didn't think the Russians would put up a madman, but they have, and so we got it, and now the market falls to be considered in that light. However, leaving aside that sort of rant, I just say that one of the things I have eventually learned in the stock market is that the area where I think one can make money and reasonably expect to make money is small caps. However, for the small caps to perform, they have to have a propensity on the part of investors to get involved. And this is what we've had in recent times. And as to how long it continues, I don't know. Particularly given that the Financial Conduct Authority has gone out of its way to stop proper publication and dissemination of small cap argument bases, and we just have to trot along as best we can. As you know, I am a libertarian, and I think people can say what they like. It's a question of freedom of speech. The idea that some twerps in the East End can inhibit what one has to say, I find deeply unsettling. I always have, and I always will. And I haven't got that long to go before it doesn't really matter, even as far as I'm concerned, as to what I think. So here goes. I have always thought that there are other interesting features, and I thought I would start with some comment on aspects of the Ukraine affair, and by casting my mind back 50 years, when on a Saturday morning, I would look in the back of the Financial Times with the odd bargains, which were then known as, and it wasn't OFX, it was the time before then, but these are little snippets of companies that are not listed, but whose shares are dealt in. Things like Weetabix. Well, the one that caught my imagination time and again was bonds from the Tsarist era. These, of course, have been issued by the Tsars to pay for their hunting trips and things like that. And they were quoted at £2 or £3 in £100 for those who wanted to buy them. I didn't get involved. I hadn't even thought how one would get one's name on the register if one were to buy them. For all I know, people would buy and eventually get a certificate from someone somewhere, though just how they could call for interest to be paid on it, or to see that the redemption check, a much larger sum, would eventually follow. But anyway, that was the way it was with Tsarist bonds. And the one thing that should be said about Tsarist bonds, which is pretty obvious, is that the communists who then ruled Moscow certainly were not going to pay off liabilities incurred by the Tsars, since, after all, this was not a liability which the people, as the communists saw it, had contracted. So anyone who bought Tsarist bonds was wasting his time. And I was reminded about that when I later read J.K. Galbraith's The Great Crash, which of course covered the goings-on in the 20s, and particularly the conduct of the governments of Argentina, who would borrow, say, $50 million, arranged for them helpfully by Wall Street, and bank the $1 million or $2 million, which was paid to the president by the bankers in Wall Street for the privilege of raising the money. Well, I must say, if I were an Argentinian citizen, I wouldn't be keen on seeing such debts paid. But anyway, that's the problem with government bonds. They can get into a very tangled water indeed. Although I say tangled, and I don't really see why people should pay, to go to the effort to pay a liability over which they have no control and which has been raised on a crooked basis. Anyway, that's in the past. I'm just saying it's necessary to look at how these bonds accumulate. And of course, we have now some very interesting circumstances arising in the Ukraine and also in Russia. Forget the fact of the sanctions. I don't think that's got a lot to do with it. Once these sanctions are over, there will be matters to sort out in accordance with law. And therefore, I think the key to it here is to look behind what is going on. For instance, I have myself bought preference shares in Raven Properties, which is London listed and has commercial warehouses in Russia, where they've let the property out to good tenants. And unfortunately, it does look as if there'll be a blockage on the good tenants paying good rents into the bank account of Raven. Quite what this leaves the ordinary shares worth, I don't know. But I've bought the press at 20p in the 100 pence. And the effect of it is that since they yield 12% at the 100p, they yield 60% at 20p. And I think that's quite attractive. Furthermore, should the Raven press be redeemed, which is possible, then the 20p might well become worth 100p. All I would say is that the market's very thin, so you only buy by appointment, so to speak. And furthermore, it will be a long time before this thing gets sorted out. And quite how it works out, I don't know. But I think it's worth a speculation at 20p. And then there is the problem of whether the banking system in Russia has now totally broken down, such that perfectly reasonable businesses like, say, Petropavlovsk may not be able to pay their way, even though they are producing gold on a big scale and getting that gold out to the market. That said, I see the Petropavlovsk does seem to be surviving, and I dare say that the authorities in the Kremlin may like to see Petropavlovsk keep going. I wouldn't myself be buying Petropavlovsk. There seem to be plenty of other gold miners around the world where the situation is much clearer. And if the underlying gold mining companies make a profit, there will be a dividend eventually to shareholders. So I don't see one has to get involved there. On the investment side, I certainly think it's worth looking at Ukrainian bonds. These are liabilities of the state of Ukraine. And I don't think there's any question of the Russians guaranteeing these liabilities. And equally, it does seem as if Ukraine will continue in one form or another under the control of its citizens. And my attention has been brought to a Ukrainian bond, which on $100 yields $7.33. Well, the bonds got down to $15. So you can imagine what the yield is down there. And rather unusually, you can buy them in lots of $200,000, which is a minimum. And that's just the way it is. However, it's not quite as bad as it looks, because at $15, the investor is asked to put up $30,000, which is much more manageable, or at least it was, since the price of these bonds has now increased or advanced to $30. Even so, $60,000 is affordable for many people, and it's worth thinking about. What is perhaps even more interesting is not the running yield, it's the fact that these bonds are due to be redeemed in 2033 at, say, $100 in the $100. And that would take the price of the bonds up really quite considerably. Of course, as one looks on one's television screens and sees the devastation of the Ukrainian economy, one does wonder whether there will be any money to pay anything to anybody by 2033. However, who knows? The Ukrainians have no record of default, and the fact is they are an industrious and intelligent people. So I think that's worth keeping an eye on. I wouldn't pay more than $30, but it is worth having a look at if you do manage to pick up stock at $30. At least so it seems to me. There are other bonds in the Ukrainian portfolio. For instance, there's a warrant to subscribe for a bond dependent upon the gross domestic product of Ukraine. Well, that's all very well. But there could be a rather pessimistic rating for the gross domestic product, in which case it would be worth having a go, or it could be that it's rather overvalued, in which case it wouldn't be. But I think one should not get involved in these warrants unless one knows where one is, and does not know where one is, and therefore I recommend that investors don't get involved in it. However, within the Ukrainian economy, there is an interesting company which has been quoted in London for many years, listed in London. It's called Ferrexpo. That's joining together of ferrous and export. And that produces steel iron pellets, which is the basis for making steel. And it produces a great deal of these pellets. And it does so, or did so, very profitably. In fact, I would think that subject to it's been able to pay its costs as it goes, it's still a very profitable company. However, it's no one knows how the Russians will control movements of export material for a while, at any rate. And therefore, there is risk with Ferrexpo and how. However, it's only capitalized at about £1 billion, and it's making a profit of the order, or it was making a profit of the order of £700 million. And therefore, should it get half a chance to leap forward, then it will come to be seen as very cheap indeed. I think that's worth a speculation for those who like speculating. I don't see why the Russians think they will benefit the state of affairs by destroying Ferrexpo. Then this can't be an advantage to it. But anyway, that's in the future. But I certainly recommend that investors have a look at Ferrexpo. Elsewhere, in this buoyant market for small caps, assuming we've got one, I'm not sure we do, with the prospect of rising interest rates, there are all sorts of other opportunities. Even as I speak, the stock which I highlighted of my master investor column about 3 months ago, REA Holdings, is still going along very nicely, thank you. And we've had 2 extra factors that have come out of the pack. The first is that REA has got its coal investment going well, and that's making a profit of $2 million a month, possibly considerably more, because coal prices have been very firm, and that's going to be spewing money for quite a few months yet, perhaps another 20 months. So that's $40 million and more from, so to speak, nowhere, which I didn't, when I say nowhere, I didn't foresee that when I commented on REA 3 months ago. Then the next joker in the pack is that REA's principal product is, of course, palm oil. And one of the substitutes for palm oil is sunflower oil. And I dare say that those of you who ever go into your partner's kitchen will find there is a bottle of sunflower oil, which is ideal for cooking fried eggs on Saturday morning. Anyway, the fact is, and as far as I'm aware, Monday, Tuesday, Wednesday, Thursday, Friday, but the fact is that sunflower oil is controlled by the Russians now from both Ukraine and elsewhere. And the fact is that there may not be that much sunflower oil to hand. Anyway, the result is that the price of palm oil has rocketed yet again in the Far East. And I think all this makes REA yet again an extremely attractive investment. As I've said ad tedium before, it's also possible to buy the REA preference shares, which is surely going to pay off its arrears in 2022. And even at the current price, which is about 110p, is still yielding 8% or something like that. And really, I would have thought that's worth acquiring too, if you're a bit of a cowardly custard, or just a cautious investor, shall we say. Elsewhere, I, dealing with particular companies, I draw investors' attention to N. Brown, which is a textile, women's clothing, principally women's clothing retailer based in Manchester. It was established by Lord Alliance, who came originally from Iran, Mr. David Alliance, about 50 years ago, and who has had a spectacularly successful business life. For instance, he and his partner, Harry Ginogli, have developed Coats, the thread providers, and now a very large and successful company. And Lord Alliance has turned his mind to N. Brown, and he and his family own about 60% of N. Brown, and a great success it is too. What I don't understand is why it's so lowly rated. The announcement from the company the other day as to how it's doing was slightly uncertain. I don't imagine that Lord Alliance cares two hoots what investors generally think about N. Brown, since he's got control and can deal with any question of a bid standing on his head. And that being the case, he just wants the thing to continue. And it is. The business seems to be making at the moment about 10 pence a share net of tax. I have some reservations about that figure because there is going to be a decline in discretionary spending money in the coming months as various costs come through into the British economy. But that said, I think N. Brown will be able to cope with that. They're certainly doing very well, and I think they'll go on doing very well. And there it is. It's capitalized at 30p at around 140 million pounds, and it's making net of tax perhaps 46 million pounds a year net of tax. Well, it may be a bit more than that, I don't know. But that's a ridiculous rating. And unlike its competitors, well, they're different companies, but the same business, of Asos and Boohoo, the fact is that this company has net asset value after writing off all the intangibles. N. Brown has a net asset value of the order of 340 million pounds. So I can't see why the shares should be at such a discount. And I think for those who have got the patience to give it, say, another 18 months to pay whatever it is this morning, I don't know, 30, 31, something like that. I think if investors are prepared to sit on that for the next, as I say, year and a half, possibly 2 years, I don't know, they will do very well. And I've certainly loaded up as regards family Cawkwell. I may add that I asked my wife about this, since women are much better at judging clothing propositions than men. Men should shut up when they're looking at the commercial prospects of a woman's clothing business, because they just don't know. Don't ask me why they don't know, but they don't know. And I asked my wife what she thinks of J.D. Williams, which is one of the brands operated by N. Brown, and who J.D. Williams has as brand ambassador one Davina McCall, who many of you will know from the telly. And she said, all this is right. Therefore, there's a further argument for getting involved in N. Brown. I also must stress that this company is solvent by miles, and they've got huge headroom for unused facilities and huge amounts of cash. So it all is well there. So I recommend that punters get stuck in there. Now, another company with which I have lived for a very, very long time is Capita. In fact, it's hard now to imagine how it's sunk so far. It used to be a long time ago in FTSE and was worth billions. Well, Capita has really sunk and is now standing at around 22p, at which level it's capitalized at around £400 million. When its results came out last week, the management came out with the advice that the transformation from its troubles of Capita is complete. And therefore, the fact that there has been a transformation is not in doubt, but the fact that it's complete means I don't think it's reasonable to expect some horrors to emerge, as so many horrors have emerged in the past. And therefore, Capita is hugely undervalued. I think it's done pre-tax about £93 million. We'll knock off some tax and you get back to 70. And really, on a PE of 5, it's got to be worth considering. There are well over 50,000 employees at Capita, and this is a big business. And if the margins will get better, they won't get worse. And as a result, Capita is a screaming buy. I'll grant you that it doesn't have the same balance sheet as, say, N. Brown, but it's a big business and it will do well in future. So therefore, I think followers can certainly have a go at 32p, or not 32p, 22p, or perhaps even pay 30p, I don't know. We'll see how it goes. Anyway, as I turn back to the main menu, which is, are these times for small caps, I am concerned about rising interest rates. That really doesn't cause investors to chuck cash at the stock market with gay abandon. Yet on the other hand, if we're going to have inflation in the order of 5, 6, 7%, which we do seem to be headed for, then you would think all this money would find its way into small caps. As to whether it does go into small caps or not, I don't know, but I suspect it will. And for instance, I just give an account of what one can do and as to whether one should do. And that's what is now known as quantum blockchain technology, which used to be clear leisure. I had myself had about a couple of million, something like that, for which I had paid, I don't know, 5p, something like that, 7p, I don't know. It had been a pretty good disaster. But anyway, I just sat there and I thought I'd wait for the opportunity. And then about 18 months ago, I had the wheeze that although one couldn't tell from the balance sheet just how much the consolidated liabilities arising from the subsidiaries was, and we couldn't do that. But quite obviously, a lot of these liabilities could not or would not be paid. Only since they hadn't been negotiated downwards, they were still appearing in the balance sheet on a gross basis. Well, I thought, well, that's a bit of a gamble worth having a look at. And I said, after the liabilities have been knocked into proper shape, then there may be a bit of an opportunity. However, being perfectionist as I am, so to speak, I asked the boss, Francesco Gardin, over for lunch at my home here. And I took an immediate liking to him. He's a very clever man, and he, he's an IT expert. It always helps nowadays. And he just, he wasn't indiscreet at all, I can tell you. But I had a very enjoyable lunch here. I've had 2 lunches here with him. And I slightly took the view it was time to have a bet on what was then clear leisure and is now quantum blockchain technology at around 0.4p. And then I really did hoover it up. And then Francesco struck lucky, which one can do in this life, was that he had established for quantum blockchain a Bitcoin mining operation in Serbia, where there's a lot of cheap electricity, but it's all hydroelectricity. And Serbia has a vast amount of this, apparently. So anyway, he got stuck in there. And then, as he freely admitted, he got extra lucky in that early last year, Elon Musk started to go potty about Bitcoin for Tesla, of which perhaps more in a moment. And as a result, the market, as it does when it's in a buying mood, alighted upon quantum blockchain technology and climbed in. And here, partly through a reasonable guess on my part about the liabilities, but principally through simply good luck, my family was able to make a thick 7-figure sum. And we are now out of quantum blockchain technology and have been for some months. The difficulty is that I'm thinking about when or whether to go back in. And I simply don't know, because I've never been keen on Bitcoin and have hopelessly misjudged that development. But if one knows that quantum blockchain technology is going to fly because of Bitcoin, well then here's your opportunity. The shares are around 2.5p at the moment, but I can't myself suggest you should have a go. I'm just saying it. The management is honest and intelligent, and there are many other developments in the pipeline. Where these lead to, I do not know. Elsewhere, on the shorting tack, I've still put on record that although I lost at least £500 million on Tesla as it goes up, I got some of it back, just £100,000. Those of you who are of a shrewd mental arithmetic mindset say I've still got to go and make 400,000 before I even break even. Well, I accept the penalty. That can happen in life. But I am going to get it back, and I shall increase my bet the further down Tesla goes. So I'm not despondent there, I can tell you. Elsewhere on the shorting tack, I've got some ridiculous Swedish company called Sandhorns. Well, that's the abbreviated name of this very complicated name. And I invite or suggest listeners to go to an item presented by Viceroy Research, which shows or refers to a network of connected party transactions. I don't know how many misrepresentations of companies have been achieved by connected party transactions over the years, but the list is huge. And I always take the view that connected party transactions means trouble. As a result, I invite listeners to have a look there and then get short samples. It's a very big market. It's a Swedish company, and the shares are currently about 43 Swedish krona, about 13 to the pound. And I think you'll make money on, say, a one-year view for the reasons I've just stated. Elsewhere, I've been thinking on the long term, long investment, about investment trusts. I don't particularly like them, but on the other hand, I'm growing older now, and I have to look to investments for my family and my grandchildren, which really will stand the test of time. And if the progenitor of these investments is gaga or dead, the fact is that they can't do anything about it. And so I said, I bought you New Star Investment Trust on the basis that you'll leave it alone. Even when I'm dead, I want you to leave it alone for at least 10 years. New Star is controlled by John Duffield. He's got about 70 million pounds involved in it, against a capitalization of the order of 120 million pounds. And net asset value is roughly 200 pence against the current share price of the order of 135 pence. If it were a poor management, I would be rather cautious about getting involved in investment trusts on a 10-year, possibly more view. But I wouldn't be. I think this is properly run, and sooner or later the money will come out of New Star. And therefore, for those who are cautious and want to take a long-term view, this seems to me a suitable vehicle. I would just mention in passing that I did have an exchange with Jim Mellon a few years ago about Master Investor having an investment trust department. Nick Sudbury, who comes up with very good ideas in regards to investment trusts from time to time, would freely admit that there are juicy bits in the investment trust world for long-term investors. The problem is that it does take quite a lot of time and work, and it's necessary for the statistical department of such an operation to be paid a proper sum for doing this work. And I'm afraid that under the rules run by the Financial Conduct Authority, this is not possible. I think this is a pity, and I also think that it's illiberal and foolish, but that's what it is. So in a valiant effort, as I might see it, I think one should just plow on and do one's best. And I offer New Star as your vehicle. I may add that the main human story, or human interest story, that has occupied my mind now for several years is that of Tom Hayes. He was sentenced in 2015 to a truly startling 14 years for allegedly rigging LIBOR. The fact is, however, is that although he has been found guilty in the court of rigging LIBOR, it now transpires that he was never guilty at all. Even, I understand, Lord Sumption, who was on the Supreme Court, has said that since what Tom did was not a crime, it's not possible for him to be found guilty of a crime, and therefore he's innocent. Well, that being the case, Tom will be free. I may add, at a personal level, since I've seen him on a number of occasions since he came out of jail a year ago, that he strikes me as honest and persistent and intelligent and courageous, because I think most people would not display the sheer persistence that he has, ably assisted by his wife, Sarah, who's a solicitor. And as a result, I trust the Ministry of Justice can make absolutely certain that his case gets back to the Court of Appeal very quickly, and the man is entitled to lead his life free of the restrictions imposed by a very foolish judge. Anyway, I think all that's in the future, and I trust listeners will have an agreeable time in the coming year of 2022. That's 2023. Cheerio. Thank you.